What's up, everyone? Welcome to episode 3 in my series where I review my favorite fund managers of all time. So I covered BMO in episode 1, Harvest in episode 2. This is episode 3 where I will cover Middlefield Group. So Middlefield has been around for a really long time, since 1979, and they are an income-oriented fund manager, of course. So in this video, I will review and go over all of Middlefield's funds, including their ETFs, their closed-end funds, their split funds. Of course, I'll focus a little bit more on my favorite ones, the ones I own myself, namely the split funds, but I'll also review everything because a lot of their funds could be a really good fit for you if you want both income and growth potential. So they have a lot of dividend focused or dividend growth focused funds as well. So let's get to it. Let's check out Middlefield Group together. All right, everyone, Middlefield Group, let's check out all their funds together. So of course, as usual, I have to say this every time. It's a good reminder whenever you're doing research on any funds, always go on the fund manager's official website. So we will check out their ETFs and their TSX listed funds, which is basically everything else. So these are their ETFs. So we'll go through them one by one. I just want to go over the split funds first. So they actually revamped their whole fund lineup. They merged some closed-end funds with some ETFs. So we'll go through the ETFs, and then you also have the rest of their products, which are, the TSX listed funds. So these are all closed-end funds. Well, that's why you see the .UN at the end. So it stands for unit because you're buying units of the fund, not shares of a company. So that's really the only difference. So let's start with my two favorite funds from Middlefield, of course. They're two split funds. So first we'll start with the Real Estate Split Corp. They just renamed it recently. So it used to be the Real Estate and E-commerce Split Fund. So now it's just Real Estate Split Corp. I think it's really, really smart. So whenever you want to know, what this fund is all about, they typically have a fact sheet. So Middlefield does have a fact sheet here. So we'll go through the RS fact sheet real quick. So this is basically what I like to call an all-in-one REIT solution, that you got the best REITs in North America, focus especially in Canada, all in one fund with leverage, right? So this is a split fund, so it's a leveraged fund. It's not classic leverage, so it's not a loan facility, not borrowed money. It's structural leverage. It's included in the fund. It's the way the fund is structured that has for the RS to have leverage. So of course, split fund, right? You have the two classes of shares. RS.PR.A is the preferred shares, but RS is where the magic happened. That's the class A share. So I'm only going to be focusing on RS here. So this fund is designed to provide investors with a diversified, actively managed. So this is an actively managed fund, guys. It's not based on an index. So it means whenever you see actively managed, it means they're stock picking, they're REIT picking in this case. Portfolio comprised of securities of high conviction issuers, which advisors believe are attractively valued and are well positioned to benefit from low interest rates, a rapid adoption of e-commerce, and growth of data infrastructure. So you have the top 10 holdings here, and you'll probably recognize a lot of the REITs. You also have the breakdown here. So this fund, guys, really focuses on two types of REITs primarily, what they call cyclical REITs, the majority, and e-commerce REITs, about 30%, 30%. So the e-commerce REITs, anything industrial would fall under this category, and the cyclical REITs, anything stuff like RioCan or Smart Centers, Killam Apartment REIT, Canadian Apartment REIT will fall under the cyclical REITs, even the medical building. So it's basically the best of both worlds, right? Because the real estate nowadays, the best is really the apartments, the residential, and the industrial. The industrial is really, really valuable real estate. So this fund combines the two themes of real estate. I really like that. It's all-in-one, and I actually went in the annual report to get the full list of holdings. So this is as of December 31st, so it's a few months old. But you have all 16 REITs in here. So RS literally holds 16 REITs, and you have them all here. So you'll probably recognize most of them, like RioCan, H&R, very popular. Crombie, Granite is a big industrial one. Smart Centers, of course, who even have some medical buildings like the Northwest Healthcare Properties, Chartwell Retirement Residences, Canadian Apartment REIT. So this is really, I consider this, or I look at this, I think it's a blue chip REIT portfolio. That's the best way I could describe it. Instead of REIT picking one by one, I just buy RS, guys. It has some structural leverage. You're going to make 8% yield buying this fund right now. It's a really, really awesome fund. And if you go to, of course, split funds, all that matters, or what's really important is the NAV, the net asset value. So if we click on NAV here for RS, you actually see it has the highest NAV of any, the highest unit NAV rather, of any split fund I've ever seen. So I consider it a very, very, very low risk split fund. And I'm talking about risk in terms of missing dividends. So the class A NAV is $18. The preferred is always 10. So you combine those, or you add them up to get the unit NAV, it's over $28. So very, very, very far from that $15 limit. And as we know, they actually increased the dividend. They started it in 2020 at 10 cents. And then starting in September 15 dividend, they increased it to 13 cents. So the annual dividend rate is $1.56, just like the other fund that I want to check, the other split fund, the E-Split fund. So this is, of course, focuses on enbridge. So this is their second split fund. I own this one as well. I absolutely love this fund. So if you like enbridge like me, but you want more income, you're more interested in the income than in the growth, or the dividend growth, ENS is definitely the way to go. So if we just look at the fact sheet real quick, it basically gives you their perspective of why enbridge is such a good investment. And I'm not going to go over this because enbridge does not need an introduction. It's the biggest pipeline company in North America. Yes, it is energy, but it's pipeline. Don't forget that. So it's not as risky like a Suncor or a Shell or Canadian Natural Resource. It's not an oil and gas producer. It's an infrastructure company, pipeline company. So they keep raising their dividends 27 years in a row. Good payout ratio. So enbridge doesn't need an introduction. So they made a split fund. So basically you have enhanced income with ENS instead of enbridge. So instead of getting 6.5% yield with the enbridge stock, if you get ENS, you'll get about 9.5% yield. So this one also, if you look at the NAV, by the way, very, very, very strong, a lot higher than $15. It's very close to RS NAV. Actually, it's over $27, right? Because to get the unit NAV, you have to add them both together, the preferred and the class A. So very, very, very safe. So these two by far are two of my favorite split funds of all time, and they're my two favorite Middlefield funds. But let's check out their other funds as well, starting with their ETFs. All right, so Middlefield's ETFs, this is the list. Let's go through them real quick, one by one, starting with HWF. So HWF is the Middlefield Health and Wellness ETF. So what you have in here is basically mostly healthcare companies, but also a little percentage to wellness companies. So if you look at some of the holdings here, the top 10 holdings, you could see mostly healthcare companies, right? Lilly, Roche, Pfizer, United Health Group, all the big blue chip ones. But you also see some companies that could be attributed to wellness. So like Nike and Apple, for example. So this ETF, the yields at about just under 4%. So if you're interested in this one, if you want some health care and combines a little bit of wellness, this is a fairly interesting one. The next one I want to focus on is MINN. This is the innovation one. So this focuses, like the name says, on innovation. The yield's only 2.63%, but that's normal because it's mostly, like you could see here, technology. It's very, very, very tech heavy. So this is basically the fund that they consider, or the stocks that they consider that are at the forefront of innovation, right? Technological innovations, including a little bit of blockchain technology. So you have blockchain, AI, genetics here, cybersecurity, big data, e-commerce. So anything to do with innovation. This is an actively managed ETF where they pick it. So it actually says Global Innovation Dividend Fund. So they actually changed the name. So this is one of the ones where they converted a closed-end fund, or they merged a few closed-end funds to this ETF. So this is MINN. Next one is LS, which basically they converted, or they renamed to MHCD. So MHCD is, it's not LS, forget about LS, it's MHCD. So this is their premier healthcare ETF. So just like HWF, it's mostly focuses on healthcare and life sciences, but it doesn't have the wellness. So it's a little bit more focused just on the pharmaceuticals. So honestly, it looks very, very similar to HHL from Harvest. That's my personal favorite healthcare covered call healthcare ETF. So it's like HHL, except it doesn't have covered calls. So if ever you are very interested in investing in healthcare companies, but you want the full growth or the maximum growth and active management, which means that they monitor and stock pick the best ones that, in their opinion, which ones have more growth potential. This is a really, really good alternative to HHL. Now you have MREL. So IDR, they renamed it to MREL. So this is basically the successor of IDR, which was one of my favorite real estate ETFs of all time. This is what I had, by the way, IDR, prior to swapping it for RS. So IDR is basically, you have the best REITs in North America. It's very, very similar to their split fund RS, except it's not a split fund. So it's not leveraged. So you're looking at a yield of about just under 6%, which is really, really good. So if you want to get that extra 2%, you got to go with RS. But let's say you're scared of owning a split fund and you don't want the split fund, but you want real estate. This would be my number one choice. MREL, in my opinion, it's a better choice than the index-based REIT ETFs out there like XRE and VRE. VRE is from Vanguard, XRE is from iShares. BMO even has one called ZRE or ZRE. So those are all index based. I prefer, when it comes to real estate, I really trust Middlefield and Dino Rico. Dino Rico, the CEO of Middlefield, by the way, is a real estate expert. That's how he got his start in the business. So really, really good ETF if you want real estate. So you have the best REITs in North America, but you don't want the risk or you don't want the leverage of the split fund. Next one is the Global Dividend Grower. So this one is also another fund that was an income fund and they converted to an ETF. So it's MPIV. That is the name of the ETF. I repeat, MPIV. And like the name says, it focuses on global dividend companies. So global dividend growers, right? So in all honesty, it's very, very, very similar to ZWG, the BMO covered call global dividend ETF, and it's very, very similar to GDV, the Brompton split fund that focuses on global dividend companies. So if you want access to the biggest or the best global dividend companies, but you don't want covered calls, you don't want the split fund, this would be a really, really good option. You're looking at 5% yield here. So this fund, these guys will stay on top of it and make sure you have the best dividend growers here from all around the world. So it's not just United States, although most of the best dividend growers come from the United States, but you also have 25% outside of North America. And of course, this is spread out through many, many sectors. So really, really good one if you want global dividend companies, but without the covered calls. Next one they have is this one here, sustainable infrastructure. So this is MINF. So this also is a new ETF. It used to be INF.UN and they converted it to an ETF. So this is the MINF ETF. And like the name says, it focuses really on ESG. It's really an ESG fund. It focuses on companies that deal with infrastructure. So a lot of utilities in here, real estate, industrials. It actually reminds me a lot of the PWI split fund from Brompton. So PWI is an ESG, sustainable infrastructure split from Brompton. So this is along those lines. It's the same theme, except it's not a split fund. So if you want some ESG and you like infrastructure, but you don't want the split fund, you don't want the covered calls, this is a really, really great fund. You'll have a little over 4% yield. And the last but not least, their last ETF is MUSA. So this they converted ACZ to MUSA. So like the name says, this focuses on really American core dividend companies. So it's really a basic ETF where you'll get the best dividend companies in America. So you have a lot of different sectors, basically blue chip companies. It reminds me a lot of the ZWS ETF from BMO, which focuses on, there's many ETFs that focus on the best US dividend companies. This is basically it, but you have no covered call. So it focuses on both income and growth as well. And you're looking at 3.4% approximate yield on this. So these are the ETFs. Now let's check out all the other funds or their closed-end funds. All right, everyone. So we did the ETFs, we did the split funds. Let's check out their other funds, which are pretty much all closed-end funds. The TSX listed funds is what they have them under. So let's start with the first one here is CLP.UN. So this is their International Clean Power Dividend Fund. I really like this one. Like the name says, it really focuses on green energy. It's very ESG focused. So if you want green energy, this is definitely one that's good for you, because it has a nice 5.9% dividend yield. So as you could see, obviously, if you look at the sectors here, I know it's small, I apologize for that. It's mostly utilities and industrials, of course. So 80% goes to dividend paying clean power companies, and 20% of this fund goes to industry disruptors. So very, very similar to the PWI split fund from Brompton, but I think it's a little bit more green energy focused actually. So if you want active management, you want no covered calls, you want to participate in the green energy potential revolution that's coming up, and you want to participate in all the growth, this for me is probably my favorite green energy fund, because it is still income oriented, which I of course really like. Next one is the global real assets one. So this one is pretty cool also. As you know, I really like investing in real assets. So anything to do with infrastructure, natural resources, always good. So this is really a diversified portfolio for real assets. But what makes it really special, in my opinion, is that 20% of this fund is in private equity sourced by Middlefield in partnership with Blackstone. So basically they partnered up with Blackstone, which needs no introduction, right? And to give you some really nice exposure to private equity. So private equity is not public equity. You can't get it on the stock market. So really cool idea here. So if you want something that focuses really on real assets with a little bit of private equity, a nice little touch here, this is a really cool fund. It reminds me a lot of the Brookfield Real Assets Income Fund on the US stock market, but it probably, it's not leveraged, unlike RA. They actually have the same code. So RA is the Brookfield one on the American stock market, and these guys also have RA.UN, but it's not listed on the Canadian market. So if you like real assets and you want to invest in it, this is the way to go if you don't want any leverage or anything like that, like the Brookfield one has. Next one is a fund that's been around for a really long time, since 1997. So this is their premier closed-end fund. It's called the Mint Income Fund. I used to own this one myself as well. I really liked it. So this is basically managed by Rob Lozon, and it's just a mishmash of dividend companies, non-paying dividend companies. So this is really a closed-end fund here, kind of like the Canoe EIT income fund. So it reminds me of that. I don't think it's leveraged, however. So you're going to get a really decent yield, however, of 6.71%. So really good fund if you want, a general fund that has a little bit of everything. This is the way to go here. It's been around for a really long time. So very reliable. Next one is AGR. AGR.UN. This is the Sustainable Agriculture and Wellness Dividend Fund. By the way, I love how they always end with name most of their closed-end funds with dividend fund. This is how you know for sure this is an income-oriented fund manager, which is why, of course, I'm covering it. So Sustainable Agriculture and Wellness Fund, like the name says, focuses on agriculture leaders and disruptors and innovators in the agriculture and wellness industry. So you got some, this is pretty niche. I think it's one of the only closed-end funds. Technically, this is a closed-end fund that invests in agriculture specifically. So really cool if that's what you're looking for. If you want to invest in that, it actually has a pretty decent yield of just under 5%. 4.6% is nothing to scoff at, that's for sure. Next one is the Sustainable Innovation and Health Dividend Fund. So you're going to have, this is pretty cool because it's basically a mishmash of tech and healthcare. So if you want a fund that mixes tech and healthcare, this is the one. You have a yield of about just under 4% here. So you have a lot of tech companies and a lot of healthcare companies. Really cool, unique idea here. And this one, also, just like the real assets one, 20% is allocated to quality private equity sourced by Middlefield. So that's another little bonus here that you're getting with this fund. I really like that touch. It just gives you more diversification, and you can never go wrong with more diversification, right? After that, we have the Workplace technology dividend fund. Very, very unique. Just like the name says, it focuses on companies that are, related to workplace technology. So you have fintech, you have cybersecurity, you have cloud computing industry. So it's basically companies that are trying to enhance productivity, address the shortage of skilled labor, facilitate workplace flexibility. So really cool ideas here. So you have the companies involved in that. So like I said, a lot of cybersecurity, fintech, some software and cloud computing. Really, really cool. Last but not least, this is their newest fund, which just came out like last week, and they don't have a fact sheet for it yet, but it's a sustainable real estate dividend fund. So this is really, you're investing in real estate companies that are prioritizing ESG initiatives. So another ESG focused real estate ETF here. Really, really cool. So it's ESG, but instead of more on the infrastructure, this is more on the real estate side. So I thought it was a pretty good idea. You're looking at about a 5% dividend. All their closed-end funds give about 5%. By the way, they all end with dividend fund. I really, really like that touch. So this is pretty new. We can't really see what holdings are in it yet, as it just came out. But like the name says, it's going to focus on real estate companies that prioritize ESG. So I'm assuming there's going to be a lot of REITs in here, REITs that are very ESG focused. So there you have it, everyone. That's all the closed-end funds that Middlefield currently has. So there you have it, everyone, the entire lineup of Middlefield's funds. In my opinion, they have two of the best and unique split funds of all time, RS for real estate and ENS for enhanced exposure to enbridge. So between these two funds, I personally have $100,000 of money in them. That's how much confidence I have in these guys, in these two funds. And although I don't own any other Middlefield funds like we reviewed, they do have some very interesting options, right? Like we saw, if you're more of a dividend growth investor or dividend focused investor who wants both some income and growth as well, like we saw, they have a lot of cool funds that provide dividends but don't have covered calls. So the yields are modest; they're about 4-5%, 5.5%. But you have a lot more capital appreciation potential with those, more than a covered call focused fund, for example. So MREL is a great alternative if you want to invest in real estate, but you're hesitant to invest in the split fund RS. So I would suggest MREL if you fall in that category. There's even MHCD, which focuses on healthcare. So it's similar to HHL from Harvest, but without the covered calls. There's also CLP.UN, which I actually featured in my green energy video a while ago, or their brand new closed-end fund, MSRE.UN. Those two are good if you want some green energy or some ESG exposure. I also like RA.UN, the real assets fund, where they have a partnership with Blackstone, who doesn't need an introduction, right? They're legendary. So like we saw, 20% of the portfolio is invested in private equity that, they do a partnership with Blackstone. So that makes the fund really, really cool and unique. So that's just a couple of my other favorite ones besides the split funds. But make sure you scope out all their funds on their website yourself. See if any interest you. Bookmark their website. This is what I do for all my favorite fund managers, and drop by once a month to see their updates, or if they have any new funds that they're coming out with. This is actually how I stay on top of my favorite fund managers, to see what they're coming out with next. So I'm also very excited to announce that next Sunday's video will be a Q&A interview video with the CEO of Middlefield, Dino Rico, and their chief investment officer, Rob Lozon. It's actually the first time I have the privilege of interviewing two fund managers and owners. They own Middlefield basically at the same time. And I'm telling you, you don't want to miss this interview. Really, really good conversation here. We talk a lot about split funds, RS and ENS. And I asked them some very common questions that I keep getting over and over about split funds. Overnight offerings, as well as split fund termination date. So you don't want to miss this video. Trust me, guys, mark your calendar next Sunday. Awesome Q&A video with the two main guys at Middlefield. Thank you for watching, everyone. I really appreciate it. Please show your appreciation by hitting that like button. It takes 2 seconds. It's free for you. It helps the channel grow. So it's a win-win. Also, if you like this type of content, if you're a do-it-yourself investor and you want to focus on income-oriented investing, this is the place to be. So make sure you subscribe to my channel to not miss out on my future content. Make sure to turn on that bell, the notification button right next to the subscribe button, so you're notified when a new video comes out. And of course, don't forget, visit our website, www.passiveincomeinvesting.ca. That's where you could access my digital product, the ultimate DIY investing package, which is on version 3 right now. So this product is really a guide or a reference to help you build your own portfolio according to your investing needs. So it's not just, of course, it's a little bit more focused on income investing, but if you're a dividend focused investor or a growth focused investor as well, there's sample portfolios for you. There's lists of ETFs and closed end funds if you want to do some manual research or build your portfolio manually. But to be honest with you, the best part of the product is really the sample portfolios. So there's both Canadian sample portfolios, American or US market sample portfolios, and those sample portfolios include samples for income, for growth, for dividend, for low risk income, for aggressive income, aggressive growth. So it's tailored to whatever your investment needs are, not just what I focus on, which is income. So really, really cool package. And it comes with lifetime updates. So you only have to ever buy it once, and you get the updates when a new version comes out. I'm actually planning on coming out with version 4 in Q3 of 2022. So you buy it once and that's it. You have access to all the updates that come in the next years. So I also offer a consultation service, a one-on-one consultation service with yours truly. So if ever you want more personalized help, it's a 1-hour Zoom meeting with me. Personally, we'll go over your portfolio. I'll answer all your questions. I'll help you build a new portfolio, transition from a growth portfolio to an income portfolio. That's a very common consultation that I do. So whatever your needs are, I'm here to help you guys. I love doing these consultations, but they sell out very quickly because I have to limit myself to 4 a week. So make sure you check out the website. You'll see a big calendar, and check out the message on top of the calendar. I usually open up the slots on the 25th of each month for the next month. So stay tuned if you want to have a consultation. I'm also working on introducing a new service, an email consultation service, to try to alleviate some of the traffic or the demand for the one-on-one Zoom calls. So stay tuned for that. It's coming in the next month or so. So I appreciate your patience. I try to help everyone out, but like I said, I need also some time to actually make the YouTube content. So how do I always leave you? Stay safe, and of course, stay passive. See you next time.